Are we on the verge of a financial crisis? Experts weigh in on the mounting U.S. debt, the strength of the dollar, and commercial real estate risks. Whalen warns that a single bad Treasury auction could trigger chaos. Adam Button talks about the unyielding dollar amidst a cyclical slowdown, while Kobeissi suggests we're already in a recession. Don't miss these critical insights. Your financial future could depend on it. Remember to like and subscribe for more essential financial updates. Today, on Financial News in Review, we will summarize the following videos. From Adam Taggart Thoughtful Money, we have Whalen, we're one bad Treasury auction away from trouble. From Kitco News, we have Cyclical Slowdown and U.S. dollar, what's driving the strength? Adam Button. From David Lynn, we have 43% of businesses can't pay rent. We're in recession, says economist Adam Kobeissi. Strap in, folks, because on today's episode of Thoughtful Money, our host Adam Taggart dives deep into the world of finance with none other than Whalen. Chris is the chairman of Whalen Global Advisors, LLC, and a seasoned expert on all things banking, mortgage finance, and fintech. He's also the author of Inflated: How Money and Debt Built the American Dream, a title that could serve as a pretty accurate description of our current economic landscape, rife with towering deficits and surging debts. The main takeaway from today's discussion is that we might be just one bad Treasury auction away from serious financial trouble. Chris warns that our ballooning deficits and reliance on short-term debt create a volatile situation that could be exacerbated by any slip-ups in Treasury sales. Essentially, he's saying, Houston, we have a problem, and it's shaped like a giant pile of debt combined with the Fed's monetary policies, making our financial system precariously perched on the edge of instability. Here are the key points discussed by Whalen. Historical context and current economic stability. Chris covers the cyclical nature of U.S. fiscal policies, comparing it to historical periods like post-Civil War and the 1929 crash. He highlights that we're currently at a 7 out of 10 on the out-of-hand meter due to our inability to meet needs without borrowing. Key evidence: the $36 trillion in debt and the inefficiency in Washington to address it. Role of federal debt and its impact. The U.S. government's reliance on short-term Treasury bills, which Chris deems bad policy, is now more impactful due to the sheer size of the debt. Evidence of volatility. Janet Yellen had to reduce the amount of 10-year debt being sold because of market reluctance at expected rates. Impactful quotes. We're one Treasury auction away from a problem. A zinger that's hard to forget. America always does the wrong thing until we have to do the right thing. That's a function of democracy. Whalen made the following predictions. Corporate financing transformation. Chris predicts that corporations will shift from leveraging debt to issuing equity as interest rates rise, impacting share valuations and buyback trends. Commercial real estate risks. Expect a shakeup in commercial real estate due to higher refinancing costs and reduced valuations on properties bought with unrealistic return assumptions. Consumer behavior. The consumer will likely roll over in the next couple of years, with more homeowners selling to extract equity rather than refinancing. Whalen underscores the urgent need for financial prudence. He's not painting a rosy picture. Expect inflation to stick around and be wary of everything from volatile Treasury auctions to shaky commercial real estate markets. His advice? Be cautious and astute in your investments, particularly focusing on defensive stocks, and be prepared for higher costs everywhere. He also points out that unless Washington gets its act together and tackles deficit spending, the average American might need more than just financial tips. They might need a lifeboat. Welcome to Kitco News, the place where finance and fun intersect. I'm Jerry Saffer, and today we're diving deep into the whirlpool of foreign exchange and bond markets. We've got Adam Button, chief currency analyst and managing editor at Forex Live, joining us. Adam's the Sherlock Holmes of currency analysis, dedicated, precise, and always on the case. Today's video tackles the mounting strength of the U.S. dollar amidst a cyclical slowdown, as well as the broader economic implications of this trend. Adam Button breaks down how recent economic data, central bank maneuvers, and political uncertainty intersect to influence these market shifts. Prepare for a roller coaster of insights on how these factors impact the future of the dollar, gold, and other major currencies. Here are the key points discussed by Adam Button. U.S. dollar and economic data. U.S. dollar is climbing as Treasury yields spike, reflecting a cooling labor market and a 4-year low in IS Services PMI data. Adam underscores that this cyclical slowdown suggests the economy appears strong until it suddenly isn't. Cue the Fed's dilemma. Federal Reserve's moves. The Fed might stay cautious, keeping high interest rates that slow down growth further. Even if a cut happens in September, it will be minimal. Generals fighting the last war. The Fed is more focused on inflation, considered yesterday's news rather than current growth decline. Japanese yen situation. Japanese yen has dropped to a 38-year low against the dollar due to internal currency management and external political uncertainties. New currency diplomat, Atsushi Mimura, faces the challenge of stabilizing the yen amidst dwindling credibility and potential high costs of intervention. U.S. political landscape speculation around President Biden dropping out of the race and the possible rise of Kamala Harris. Political uncertainty fuels market jitters and highlights potential changes in fiscal policies impacting gold and the dollar. European political uncertainties. Massive political changes in UK, France contributing to euro instability. Adam notes that Europe's cautious regulatory stance hampers innovation, painting a challenging economic outlook. Adam Button made the following predictions. U.S. dollar strength. Continued U.S. dollar strength as other central banks cut rates more dramatically, causing prolonged USD ascendancy. Fed's rate cuts. Adam bets on ongoing Fed caution, potentially leading to high rates until mid-decade, with eventual cuts bringing rates as low as 1% by 2026. Gold prices. Gold may see a pullback to around $2,100 before long-term buying opportunities emerge, driven by geopolitical instability and central bank purchases. Adam Button concludes with a broader view on macroeconomic caution, emphasizing that ongoing political and economic uncertainties signal a complex trading environment. The focus remains on U.S. dollar strength, potential for conservative Fed rate cuts, and gold's long-term attractiveness. With all these twists and turns, it's clear. Keep your eyes on the Forex charts and your portfolio diversified. Welcome back to the David Lynn channel, where in today's video, we dive deep into the current economic challenges with economist Adam Kobeissi, the founder and editor-in-chief of the Kobeissi Letter. Adam is here to shed light on the alarming statistic that 43% of small businesses in the U.S. couldn't pay their rent in April, pointing towards an impending recession. The core thesis of this video is Adam Kobeissi's argument that the U.S. is already in a recession, supported by worrying economic signs like small businesses struggling to pay rent and increasing part-time employment. He suggests a deep economic issue reflecting through market volatility and the potential for greater economic fallout. Here are the key points discussed by Adam Kobeissi. Small businesses in distress. 43% of small businesses couldn't pay their rent in April. Small businesses contribute 44% to the U.S. GDP, yet face significant financial strain. The fallout from struggling small businesses could amplify problems in the banking sector and lead to market consolidation. Fed pendulum market expectations swung from extreme dovish outlook with multiple rate cuts to a more hawkish stance recently. Despite recent hopeful inflation data trends, Adam says the Fed needs more consistent data before making rate cuts. Labor market realities. Despite positive job growth headlines, many jobs are part-time, and full-time employment has decreased by 625,000 in May. A record number of Americans are holding multiple jobs, indicating economic stress. Equity markets disconnect. Despite economic concerns, equity markets have shown strong resilience and bullish trends, largely driven by AI stocks such as NVIDIA. Adam emphasizes that the stock market is not reflective of the current economic condition, which is straining under inflation and labor market issues. Adam Kobeissi made the following predictions. Continued inflation control. Adam believes inflation will continue to decrease towards the Fed's 2% target, but cautions against premature rate cuts that could destabilize market confidence. Further challenges for small businesses. Small businesses may continue to suffer, potentially leading to more defaults on loans and an exacerbated commercial real estate crisis. More banking sector volatility. The strain on small businesses may lead to further bank collapses, particularly affecting regional banks heavily tied to commercial real estate. Adam Kobeissi concludes that while the stock market remains bullish, the underlying economic issues reflect a recessionary climate. He encourages cautious investment and acknowledges the challenges ahead for small businesses and regional banks. Viewers are urged to stay informed through platforms like the Kobeissi letter and to consider diversifying their investment portfolios to mitigate risks. Chris Whalen believes that the U.S. could be one bad Treasury auction away from financial chaos, highlighting the dangers of towering deficits and short-term debt reliance. Adam Button discusses the cyclical slowdown of the economy and the resulting strength of the U.S. dollar, emphasizing a cautious Fed stance. Adam Kobeissi suggests the U.S. is already in a recession, drawing attention to small businesses struggling to pay rent and rising part-time employment. Although all experts agree on the precarious financial landscape, they diverge on specifics. Whalen points to Treasury auction risks, Button highlights the dollar's strength amidst cyclical slowdown, and Kobeissi focuses on small business distress. To navigate these turbulent waters, viewers are encouraged to be prudent and diverse in their investments. Thanks for watching Financial News in Review for July 4th, 2024. If you'd like more time-saving content, please remember to like and subscribe. If you have ideas for more channels you'd like to see summarized, drop a comment below. See you next time.